Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 7th of July, 2021. And we're looking at some of the first steps the UK has made to make it the world's most advanced and exciting financial services hub. Or at least that's the objective. And it's all to do with a public listing of Wise PLC, a digital payment provider. The first of its kind being listed in this way. Now, we're also repeating this video on the CryptoPlus channel as it involves a listing of a company which challenges, frankly, traditional banking. Now, before we start, a quick shout out to our Wednesday morning update and our CryptoPlus channel, and we've placed links to both of these below. And speaking of CryptoPlus, we have produced two videos these past 2 days. Yesterday, NICKY'S crypto portfolio live review, not looking so good, where we looked at my friend Nikki's cryptocurrency portfolio and her thinking behind her investment strategy, a lot of it apparently involving her gut, as she said, and also a video we published this morning, what will cryptocurrencies look like in 50 years' time? And we've placed links to both of these below. If you find these subjects interesting, then please, on this channel, give us a thumbs up and, of course, subscribe and pop along to CryptoPlus and do the same there. Okay, so let's take a look at this article. Now, a very interesting article on Bloomberg today. Fintech Wise rises in direct listing in win for London markets. Now, we'll run through this because one of the concerns that the British government has had vis-a-vis Brexit is that we were seen as the central financial services centre for the whole of the European Union. Yes, there was a battle with Germany for that position, but London certainly dominated. And frankly, if it had not been for Wall Street, would probably have been dominating the world. And the concern the British authorities have had has been, to what extent will London lose its preeminence in the European market as well? And so this article really is, and what it's referring to, really is quite crucial in terms of actually giving us a roadmap of where the Chancellor of the Exchequer, the central bank, and those in authority for the financial markets are planning on heading. So let's take a look. Fintech company Wise PLC rose as it began trading via a direct listing on the London Stock Exchange, in the largest such deal ever, bolstering Brexit Britain's capital market ambitions. The money transfer company born as TransferWise opened at 800 pence, that's £8, giving it a market capitalisation just shy of £8 billion or $11 billion. That's more than double the $5 billion valuation in a July 2020 fundraising. The stock initially jumped as much as 4%, before pairing gains and was trading at 809.40 at 11:30 a.m. in London. The company eschewed a traditional initial public offering. Instead, shareholders are selling a stake of at least 2.4% following the 3-hour auction. Wise won't raise fresh capital, while existing investors were able to sell shares directly on the open market. Now, there are a number of ways that companies can list their shares on the market. One of them is, of course, to open it to the public, so you have this initial public offering. Another, really, is for the actual existing shareholders, pre-PLC status, selling the shares themselves into probably investment banks and merchant banks in the main, and other significant investors. The successful direct listing of Wise is clearly a boost to London's ambitions as a global hub for tech companies. said Liberum Capital strategist Joachim Clement. Wise is a highly profitable and fast-growing challenger to traditional banks. That is what counts for investors, he said. Wise is following US tech companies by offering existing shareholders extra voting rights. Popularized by the likes of Google parent Alphabet Inc. and Facebook Inc., such dual-class structures have been a sore point in the UK because they allow a select group of early investors to retain tight control after a business lists. And that, to some degree, goes against the grain of the whole concept of the liberalization of shareholding democracies. And we can certainly say back in the 90s, there was, if memory serves me correctly, the Cadbury report on corporate governance. And this was something that was being addressed there, shareholders' rights versus those of the board. And when companies go public, you move from limited in the UK shareholdings to public limited company shareholdings, and whether each shareholder should have the same right as another. Wise's sale will lead to a greater acceptance of enhanced voting rights among more and more investors, particularly growth investors, said Gavin Launder, a fund manager at Legal and General Investment Management. Still, the limited amount of stock available in the listing means it could be squeezed a bit too high to start with, he said. A successful listing boosts the British government's plans to allow dual-class share ownership on the top tier of the LSE, that's the London Stock Exchange, where they are currently prohibited. The proposed change is part of a wider effort to make it easier for companies to go public in London. So you can see what the government is aiming to do here. It's to attract public listings of major companies. Chancellor of the Exchequer Rishi Sunak last week promised to make London the world's most advanced and exciting financial services hub, and we reported on this last week. Wise, which counts billionaire Peter Thiel, Silicon Valley's Andreessen Horowitz, and UK-based Baillie Gifford among its early investors, considered listing in the United States, but London was the choice. Chief Financial Officer Matt Breer said in a June interview, "London is a great place to access global capital, and it's also a great place to do a direct listing. A little-known secret that we are about to blow up." Wise's first day pop brings some solace to London, where high-profile new stocks such as food delivery startup Deliveroo PLC and semiconductor technology firm Alphawave IP Group PLC had disappointing trading debuts. "It's a watershed moment for London," said Alistair Haynes, Chief Executive Officer at NICKY'S Exchange, a share trading platform. "While one deal alone doesn't a city make, innovative deals of this kind will help establish the UK as a global hub that can compete with the United States." See the direction, a greater perhaps liberalisation now of shareholding democracies. The ability of companies to list their organisations on the London Stock Exchange, perhaps with a softer or lighter touch than maybe elsewhere. It's certainly an interesting move. Our next question, of course, bearing in mind what the FCA, which is our investment regulatory authority, did to Binance, preventing them trading here in the United Kingdom, it'll be interesting to see how they deal with cryptocurrency type organizations, especially bearing in mind that Wise does potentially compete, of course, with our traditional banking operations. We shall have to wait and see. But do share your thoughts. Do you know anything about this company? If you do, please share it. It's one we are going to watch very closely on this channel. Look forward to your remarks. And if you like us covering issues such as this, please give us a thumbs up. And of course, if you haven't done so, do subscribe and press the bell sign. Thank you. Until next time. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.